Welcome back to the Hunter of Dividends YouTube channel. This is Kyle Hunter, aka the Hunter of Dividends, here to talk to you today about CubeSmart self-storage, another REIT that I think is a quality investment here for the long term. Let's dive into this one, take a look at the numbers here for CubeSmart. I'm going to start off with the chart of CubeSmart, what it looks like here of late. This is a chart that looks kind of similar to a lot of ones that you've seen throughout the stock market here in recent months. The stock was going along doing really good, and then it's really fallen off here since April, dipping from the mid 50s down to 40.72 here at the close today. You see the last month has been straight down. So CubeSmart is really taking a dip. If you look in the long term, this is definitely a stock that has done well long term, but we finally have a dip. CubeSmart's one that I've been wanting to buy for quite a while. I think the self-storage space is very good, especially recession proof. I mean, this is a great business model. I'm kind of kicking myself that I wasn't investing in self-storage years ago. Such a great business model. No matter what, people are going to want to store their stuff. There's always tons of stuff and not enough space for it. So I like CubeSmart. I like Public Storage, PSA, EXR. I think these are good stocks long term. Now they've been expensive, so now they've finally come down a little bit. Let's take a look at Fast Graphs here. I really like the Fast Graphs product. Chuck at Fast Graphs has a great YouTube channel. I definitely recommend subscribing to that if you haven't already. Let's see here. When you look at Fast Graphs, this is the historical chart with the fundamentals here. Their average price to AFFO, which is definitely what you should look at for real estate investment trusts. It has finally dipped below the average price here. And that's not been very common here lately for CubeSmart. If you look based on earnings, you see the earnings one looks similar there. Now we'll forecast it out. Forecasting out diluted earnings still looks overvalued by this metric. Free cash flow, it's getting down into the area where it's close to value. I feel like CubeSmart's one of these. It's always going to be relatively expensive because it's such a good business model, a good company. So this could go lower. If it does, I'm happy to dollar cost average into this one, certainly. But I think CubeSmart was so overvalued for a good while that I couldn't do it. Now it's come down into line. If you look at sales, this looks like Fast Graphs thinks that you could have going out a few years about a 10% rate of return on a year. And I'm happy to get 10% at this point. The stock market has done so well for a long time. Trying to buy the dip here in the stock market. If we look at long-term growth, you'll see the same thing, that it looks like CubeSmart could be a good long-term play here in the 10%, 11% rate of return range. So I think CubeSmart is a good look here. Now let's look at Simply Safe Dividends. I try to keep these videos brief. I'll be succinct here. 4.22% dividend yield for CubeSmart. A really solid dividend yield, 61 in safe. So not an amazing dividend score, safety score from Simply Safe Dividends, but a good one. This is a very small position for me right now. I'm going to try to add to this. 26% dividend increase the last time. So I do think this company will be committed to raising the dividend. And as we go forward, you can see here that it's about reasonably valued according to Simply Safe Dividends. In fact, 5-year average for AFFO, price to AFFO ratio is 19.9. Right now, we're sitting at 17.0. We're at the 52-week low. This is a company I like down here on the charts how you can see the free cash flow per share consistently go up. This is an impressive sign for me. Free cash flow per share is what you really want to be able to keep increasing that dividend. So I feel confident that they can keep doing so because of how they're doing there. The return on equity is pretty good. The net debt just a little bit below, which is healthy, and then the interest coverage. They say above 2 is healthy for REITs, and we're at 3.34. So I like CubeSmart. I think that this one is not like wildly undervalued or anything, but I think now it's no longer overvalued. And I'm going to dip my toe in the water and look for any kind of further weakness to increase this position, because I think the self-storage business is a great one, regardless of how the economy is doing. So happy to get involved in the self-storage business in a small way. Let me know in the comments below if you agree with this or if you don't like CubeSmart, why or why not. And if you have any stock ideas that you want me to look at here through Simply Safe Dividends or Fast Graphs, I'd be happy to analyze any of those. Give this video a thumbs up and comment if you have any comments about this. Certainly follow me at Hunt Dividends on Twitter, and I will talk to you guys again soon. I hope everybody's buying the dip here in dividend stocks, and I hope you have a great rest of your week.